on this chart here, this big 5-year base is what we've been trying to break through. And on GLD, we need to get to roughly 130. We don't have very far to go. We're sitting at 127, but a slight move up today of 1%. If this was to start to kick it up, then we'd really want to be on that trade. A 5-year breakout is probably the kind of news that we'd like to see. Copper has rallied slightly this morning, but it's been impaired trying to get through this level up in here. JJC is the ETF that tracks copper, and so this is $37, $38 here, and we're down around this 33, but as you can see, we're just below the 40-week moving average. Now, the worst part about copper is when it goes below the 40-week moving average, you want to pay attention. That's been really important resistance and then became support for the last 2 years. So copper below the 40-week moving average is a pretty tenuous place to be. So just pay attention to that for the industrial metals. That would include the rare earth metals, probably some issues on FAN and TAN, the solar and wind ETFs. So I'll call it renewable energy. All of those areas could be impacted by lower copper. So that's on the watch list. Regal Bank here, we're starting to see some of these banks make new 52-week lows, and we're starting to be concerned about those. I think as we see some of these banks get weaker, just keep it in mind here. Citigroup now below the 40-week moving average, and Wells Fargo Corp. So those are the two kind of weak ones out of the big ones. Both of those, Wells Fargo doesn't have much to go to make new 52-week lows. So those are important. I think for some of the upgrades today, we've got Win. And this chart obviously got rocked a little bit by Steve Wynn's departure. We're sitting in here around a 180 level. And on this 180 level, it wouldn't take much to pop to new highs, but obviously this chart's been a nice big uptrend for 2 years, and as long as the economy does well, gambling usually does too, so there's a nice correlation there. There's a new IPO that came out roughly a year ago, ALNA, and I'm just going to throw it up because it really shows a nice picture here. Let me change the chart setting. I'll just go to my daily setting. What we see on this chart here, so it IPO'd, shot up, pulled back, and on this pullback, you could see that the chart was basing, and now it's starting to take back off to the upside. But a lot of these stocks, the IPO stocks, when they base and start to come back again, they're worth paying attention to. Obviously, this isn't a new 52-week breakout. It's only a 3-month breakout, but the volatility's been huge. $15 down to $6 and all the way back up to 14. So anyway, there's good stocks that are moving like that. I put one out on the Don't Ignore This Chart blog late yesterday, and you can see that the stock's trading around this $20 level. Anyway, you can go to Don't Ignore This Chart blog, and you'll find a great article there that just covers off the 5-year history of the stock. We don't actually need to go into the news reports. We can pretty much read it right on the chart. There's a new company that showed up this week from Netflix, which is the Chinese equivalent of Netflix, and it's called IQIYI. And obviously, we have no little data for it. So let me just put up. I think I've got a. Yeah, here's a 30-minute 1 month. That'll be okay. But you could just see it. It started to trade yesterday morning, and it's drifting down. But important with all of the opportunity in China, 1.3 billion people, and a Netflix type offering, you might want to pay attention to that chart. Just a few others. Dropbox opened last week, and DBX is the ticker symbol, and it's basically holding in the range. And I'm not going to. Whoops. With that. I think it's holding in this range, so it's a good place to watch. But obviously, these tech companies as they IPO are pretty important. And lastly, Spotify kicks off tomorrow. So with that, I think I'm going to wrap it up, and we'll pass it over to Chip, and he can take over with the introduction.
Yes, absolutely. Chip, are you there? We're ready to hear all about how awesome StockCharts TV is and the app and all of that.
Hi, yes, welcome everybody. I'm here, and I am very excited about talking to you about StockCharts TV, but I'm also very excited about what's going on in the market. I just wanted to maybe take a quick thing and make sure everyone knows how to use StockCharts to watch what's happening. We're down 2.2% on the Dow at this point. On the members page, if you go to your members page, you want to make sure you have the top 10 and maybe the S&P 500 on your market movers. You're going to be able to see the stocks that are up, like Humana and the gold stocks, and then you'll see, more importantly, the stocks that are down. Some of them are some very big players in the tech industry, and some of these are getting into definitely some severe ouch territory. But if you wonder how Greg finds some of the stocks that he's talking about, this is one technique. There's others, but just make sure that you, on a day like today, when the market is moving really quickly, keep checking this market movers and switch between most actives up and down for the Dow, the S&P 500, so on and so forth. That's kind of your front row seat to what's going on. All right, so let's get into the big announcement for today, which is that StockCharts TV is happening. So what does that mean? Well, what it means is that we now have a 24/7 streaming video channel that's going to bring you all the information that you want on technical analysis throughout the day, and it's going to do it in an educational nature and with live shows sprinkled throughout. So we're gonna just continue this broadcast. This is the beginning of the never-ending beginning of the StockCharts TV that never ends. So we'll be going 24/7. The goal here is to have all different kinds of shows on for you to watch. The shows will, as I mentioned, they'll be replayed from time to time. They'll be repeated from time to time. Some of them are pre-recorded and are not necessarily about what's going on in the market right now. They're more educational in nature. But others of them are, like this show, very much tied in with what's going on in the market right now. And by replaying them and by spreading them out throughout the day, that gives you options for when to watch. You don't necessarily have to watch as the show is going out live. We will be replaying it as well throughout the day. So, for instance, this show will repeat as soon as it's done. Pretty much, we're going to have another rebroadcast of this show, and then it will also show a little later in the evening for people who are not available to watch it live. Maybe they're at work or whatever right now. A key point to keep in mind here is that if you're a fan of Market Watchers Live, for instance, because you've been watching maybe this show for a while now, nothing is changing. You don't have to continue to watch it later. If you watch it live, great. We love it. Please continue to do that. It's just that there's going to be more of Market Watchers Live on, and you have more options for when you can watch it if you can't necessarily join us during the lunch hour. The important thing is to remember is that you can go here to StockCharts TV. We've changed our banners up at the top of our page, all of our pages now. You can click on StockCharts TV at any time. Note, when we have a live show going, we'll have the little red live banner right next to this link. But you can click on this tab at the very top of any of our pages. First off, you'll be able to see the actual show. But then second off, more importantly, you'll see the schedule down below. And so this is what we're going to be showing. Notice we've kicked off with Market Watchers Live. It's going to continue. We'll have a repeat of that, and then we'll have other educational information. Greg's show, or Greg's talk, I guess, the Canadian technician, is happening a little later today. Here's the repeat of Market Watchers Live at 5:45. We'll also have pre-recorded content from our other presentations that we've made over the years. Some of our ChartCon presentations have been repackaged, put together, re-edited, and turned into segments for StockCharts TV. So, for instance, 10 Essential Steps with Gaddis Rose is one of those ChartCon presentations that will go out at 7:15 tonight Eastern. Arthur Hill has a similar educational stuff there. And then John Murphy, we love that John Murphy will now be able to join StockCharts TV, at least in a pre-recorded form. And he has a segment coming up at 9:45. Throughout the day, there will be other educational segments, little smaller tips and tricks, those kind of things that are going out across it as well. If you have time to sit back and watch StockCharts TV, great, you can do that, is the point. But you don't have to. You can also, consult the schedule, pick out when you might want something you might want to see and watch it then. At this point, we think we have over 2 full weeks of unique content that are between the recorded content that we have and the live shows that we're going to bring you. 2 full weeks of content that we can provide. Now, that is without any repeating of anything. And there will be repeating of stuff. At 3 in the morning, we're not going to have unique, brand new content, but we will have some reruns then. But the point is, we're also getting more content. More and more and more content is coming into us every day. We're working hard with other people to provide new shows, to provide new recorded content for StockCharts TV. Really looking forward to having all that come online. As of, for instance, Greg, are you there?
I am here.
Greg, you have a new show to announce, don't you?
I do, and we haven't come up with the name yet. Right now it's Chanel Show, but we are working towards getting a new name for the show, and it will not be as commodity focused. It will be more broadly focused and kind of just what's hot this week. And I'm hoping to do the show more from longer term charts, so weekly and daily and that kind of thing, not so much intraday, but looking to expand different methods of scanning. For the show, for my Friday segment this week, I'll be showing you some of the things that I did over the weekend with the market pulling back. And so in that show, we'll cover off different ways to examine the market, ideas to try and find ways to improve your utilization of stock charts, because I think there's so many buttons on here that we can help make our profits click a little faster. And the idea behind the show will be to help you find those and then show you current market setups that are working right now.
Terrific. Yes. So if you want even more Greg than you'll be getting this week, which is probably a little too much, frankly. But Greg will have his shows on Fridays, right? Starting this Friday, correct, Greg?
That's right.
In addition, Arthur Hill will be joining us with a new show, completely new. Arthur hasn't had a chance to, from his perch in Belgium, join us necessarily for this show, but he'll be joining us more and more over time. When's his new show kick off again? What?
I think it's April 12th.
April 10th?
12th, I think.
I do believe it is April 10th, Tuesday the 10th.
Yes.
There we go. Okay.
So Tuesday the 10th, Arthur's show will kick off, and that's going to be another great thing, especially if you're a big fan of Arthur Hill and his approach. We, as I mentioned, are just continuing to work with other vendors. Part of this, initially, the StockCharts TV will clearly be very focused on StockCharts.com and what you can do with the website and what is shown on the website. But I want to emphasize, our goal is not for this to be a 24/7 StockCharts.com infomercial. We are trying very hard to bring in other people who are interested and have different perspectives on technical analysis, charting, how to visualize the market. And so over time, you should expect more and more diverse types of content on this channel. This channel fits in very carefully, very closely with the overall mission of StockCharts.com. Our mission is really a threefold thing. We're trying to bring really great tools for market visualization, combine that with really great commentary, and really great education. Education is like timeless information about the market, whereas commentary is timely information about the market. And so if we can do things that kind of combine all three of those things, show you how to use the tool, educate you, and give you timely information about the market, that's what we're interested in. And StockCharts TV, if done correctly, clearly will be able to meet all three of those needs. And that's why we're investing a lot of time, a lot of energy into it. This is not a small thing with us. It's a very, very big and important endeavor. We already have a lot of people behind it, and we're bringing in more people each week. I'm just checking my notes to see if there's anything else that I wanted to show you guys. Oh yes, the apps. So we now have the StockCharts TV app. It's in the Apple Store as well as the Google Play Store. You can pull up StockCharts TV on any mobile device. It doesn't have to be your browser. If you're out and about and you have your phone with you or your tablet, you can use the StockCharts TV app and just immediately go and see what's currently streaming on the show. It's very quick. It's very easy. It's not very sophisticated because it doesn't need to be. It shows you what's on StockCharts TV. And so that can be very, very useful to you. I think I might be watching the show more in that mode than on my my regular computer. So with that, I think I'm out of things to talk about. Do we have any questions or comments that have come in?
Oh, of course, lots of them. Of course, people were wondering if this is member-only content, and I think we
Nope, totally free, totally free.
exactly. Let's see. They want to know if the live shows are still recorded and available on StockCharts YouTube channel.
Yes, they are. Nothing's changed.
All right. And any thoughts about Roku or Apple TV app?
I would love to be on everything you can imagine. We are going to get it working on the current platforms we just talked about, the web and the apps, but we are going to be looking at all possibilities and all opportunities, frankly. I would love to see us on an Apple TV channel. I'd love to see us on Sirius XM. I'd love to see us with a podcast. I'd love to see all the different ways that this content can get out and that can be consumed most easily by the people that are watching. We're interested in that. If you have strong opinions or would like to see us do a particular thing, please let us know. But we're going to be looking at everything we can do. Maybe, the nightly news. We'll see. I don't know.
We'll have to see who you can get signed up to do that.
Yes.
Filling up the schedule. It's going to be great. I'm really excited to have the show going on. I mean, it does, we have it available on the StockCharts channel. So if you do need to go back and you don't want to watch it on the rerun, but I can see how I could have this channel on and just the next thing I know, it's hours have gone by. So.
Right. I mean, some people have CNBC going on in the background, which is fine, but why not have StockCharts TV going on in the background?
Absolutely. Well, this sounds great. I'm really excited about it. How about you, Greg? Are you okay with having to add on to that workload of new show?
Well, there is so much content that we can provide, and I think one of the things about technical analysis is it usually needs description. So when you write a blog and write something and then create the chart, I think it does help when somebody gets to talk to the chart and being able to record that and then going back and looking at what either worked or didn't work in the pattern and seeing how things develop, the 2-year base in Twitter, how does that work out well and that kind of thing. So I think there's lots of opportunity. Bruce Fraser, really nice stuff. Everybody's got a different timeline, and I think one of the things that helps by having multiple authors for the show, for StockCharts TV, is the ability to get different time segments. Some people are really short-term traders. Some people want to trade weekly charts. And I think this gives you the opportunity to find the authors that are working with the type of trading you like to do, and then you can use that all of the other information on StockCharts TV to help find the tips and tricks and scanning basics there with Bill Shelby. That kind of stuff is very, very powerful. So I think there's some huge upside. Really, your only 24-hour technical analysis channel in the world, probably, and I can't imagine. That it won't just get stronger. We've already got lots of material for it, but we'll be kicking it up quite a bit. We've got a lot of writers and authors at StockCharts, so should be great.
All right. Well, thanks, Chip, for coming by on the show. We always love it when you're here.
No problem. I'll see you guys later. I'll see you guys in about 24 hours.
All right.
Thanks, Chip.
And with that, I guess we can move right on into the Monday setups. All righty. So I think we said I would go first, but I always forget. You
could fire away. That's all good.
Yes. Okay. So let's go ahead and get started there. I hope my screen will share. It's so strange. It shares so nicely before the show, and then I go and do it, and it's like, yeah, no. There we go. Excellent. All right, so our last picks, I don't know if we have the graphic for that, Zach, but last week's picks, I know I had WIP, and I think I actually ended up doing okay on a bond fund that last week. I wish we'd gotten in, I think, a little bit lower, because I think I ended up getting in at the high side of this bar. Usually I write down what I bought it at, but not too bad, not too bad. And gosh, I cannot remember what Tom's pick was last week. goodness. Well, I'm going to get on with ours. Oh, there we go. Thank you for helping me out, Zach. Okay. Yes, so at 59.15, and I think right now WIP is coming in at 59.41. ALNY, let's see what we did there. All righty. I will get that screen back and we'll see. All right, ALNY. Now the share screen's being weird again. This is so weird. I don't know.
Okay, well, I can pick it up if you want.
Yeah,
so,
why don't you go ahead and...
let me do that, and I'm going to go grab ALNY. Let's grab Tom's pick from last week. And this one was not having a good week. So anyway, it fell hard, and now it's gone right through the 200. So really a hard rollover as it tried to break out and then failed. So that's the reason you trade technical analysis with stops. You get through 140, broke out to new highs, and pretty much on the day Tom called it, it turned around and reversed. So yeah, difficult trade there with
yeah, that didn't turn out too well for him.
Market pulling back very hard. I posted this one on Don't Ignore This Charts, and I think one of the reasons I really like it is this setup here, just trying to break through this $20 level, and I think they're in stem cell therapy. But you know, these biotech stocks have immense leverage both ways, and this stock actually has a great story to tell over a 5-year period or a 3-year period. I'm just going to pull up the 3-year on it. But you can see that it IPO'd about 3 years ago, went flat, soared up to 77, and then drifted all the way down, then gapped down, then fell down, and finally made a base last July, and now it's started to work its way out of the hole. What I like about this is it looks to me like it's getting ready just with this sideways consolidation. It's done 2 of these now, and it looks to me like it wants to turn higher. Even in a weak tape where we see some of these other biotechs really letting go, this one is still up on the day, 4%. So I think there's lots of opportunity for stocks like this. But again, you know, watching how they range trade or how they hold the range, and if the whole market's going to fall apart, then you know, a lot of these stocks are going to suffer too. But the one thing you can find is when the market is pulling back hard and you find things that are able to go up, like this stock was up 10% last week and another 4% this morning. Things that are fighting the trend really hard when the market's a headwind, what happens when it's a tailwind? And it can be, you know, you could see some really nice moves here. So I'm looking at a lot of these, some of the utility companies that are really oversold. I'm trying to think of some names, but if I went and picked, I'd pick Rocket for my #1 pick, but Continental Resources looks like it wants to try and break out here. This is major resistance. If it can't hold above the 10-week moving average, I'd want out of that one. DSW is a really interesting one on a weekly chart. This is a shoe warehouse retailer, and you can see it just broke out to new 52-week highs. I'd want it to hold last week's low here, not much room down here. But if it can hold on to this, I think there's a lot of opportunity to the upside. So
excellent.
So it's stocks like that I think have some big opportunities, and just be very aware that if the whole market breaks down, let's say financial issues in Europe or something, that obviously your stops are going to get hit. But on these pullbacks, it's a great opportunity to try and find long stuff.
Yeah, I know you were talking about all kinds of juicy symbols for Monday setups. So I know, I have to say though, when I ran my scans, it was not quite as I don't know. I got about 22, I think, out of the one scan that I ran, and you know, not too bad. And I whittled it down to about 5, but hopefully I'll be able to share my screen here in a minute to get.
I ran a scan on the weekend of stocks that hit a new high in March. So sometime in March, not just on the last day of the month, but sometime in March, there was 700. So then I went over $5, and it was There was 400 and some, and then you can keep tightening the volume or whatever. But with 450 stocks hitting new highs last month, and just think of the volatility the overall market was in, there was lots of stuff that was perking up and still jumping out to new highs.
Sure.
So I think it's just a matter of what you're scanning for. And the one thing that happens when this market pulls back 10 and 15%, if you're sitting there watching something like the full stochastics and giving away a little bit of the Friday what I want to cover off, but when you get these bases that start to break out and you can try and find them, full stochastics is one way to scan for them, but there's lots of opportunity. So in this particular case, so I went and I put together a whole bunch of these, but look at this beautiful breakout on this DSW. What other ones have I got here? This is Booking Holdings. It's a $2,000 stock, so it's a little bit too hard to deal with. But here's an IPO from last year from 2016 that's been gently climbing. Looks good. I don't know anything that they do, Vistra Energy, but that chart's been in a nice uptrend. Maybe you get an opportunity to buy it on the dip. I think there's, look at this list of stocks, and I just picked out of the middle. You can go grab any one of these, and I don't know, you sit there and scan through them. Here's Intuit. I don't know about you, but I got to do taxes, and so the stock just keeps climbing every year.
Yeah. Now, I'll show everybody what I scanned. I always publish my scan. I'm going to steal the screen back, hopefully.
Sure. Go ahead.
All right. Yep. It's just being very difficult. I just don't understand. Oh my goodness. It's going to be a long show if I can't share my screen. I don't think you can come up with all of it. So I'll just...
Okay, well, if you want, I could put it up on the screen and you could tell me which stock you wanted to talk about.
Let me try this one more time. I know we're not supposed to hit that stop share, but I have a feeling that's why it's being difficult. All right, well, yeah, I'll just give you a couple of the ones I had, and
Sure.
I'll explain them. Let me go so I can see them. All right, so I'm going to give you my pick last. So I ended up with 4 stocks, and for me, I'm really picky about my scans, and so I do end up getting kind of a small amount. And unlike you, a lot of times I actually have to widen my range sometimes. If I'm getting a little too picky about the scooter value, or if I'm getting a little too picky about where the EMAs are, then I can broaden it a little bit. I didn't need to really broaden it much. The only difference was I'm still looking for PMOs that have been rising for 3 days that haven't actually had their upside crossover. And generally I look for a 5, 20, and 50-day EMA setup, all positive. The 20 above the 50, the 50-day EMA above the 200. And then I usually screen it off with the scooter as well, like a scooter value above 75. So when I ran it, I didn't get anything when I had that in there. So what I did was I opened it up to just that the 50 would be above the 200, not necessarily that the 20 had to be above both. So that opened it up. I ended up with about 25, I think, whittled it down to about 4. I'll probably end up doing a workshop on whittling down scans. I might have done that already, but I think there's some more information to be had there. But in any case, let me try one more time to share and just see if I can't. But I'm going to go with the first one I want to look at. No, it just doesn't want to do it. Okay. I haven't had that problem in so long either, Greg. It's really frustrating. Okay. So the first one's going to be, because we're going to run down on time here and I want everybody to get to see everything. So first one I'm going to show you is La Jolla Pharmaceutical, LJPC. I thought it interesting. You had a pharmaceutical come up and I got
You want 6 months or what kind of time frame?
1 year daily.
1 year.
Yeah, I don't know about the PMO. Actually, you could probably use my chart style in the thing, but it's going to be tiny.
Sure. So I've got PMO on the bottom, scooter on the top, and a relative strength in the middle here, and then the 4 moving averages.
Yeah, that's good. That'll work. So anyway, the PMO you can see is already scooping up. It's been rising. Now, necessarily, I wouldn't be that excited about this chart pattern, but I do see a declining wedge, a falling wedge. And that is a positive, that's a bullish formation. You can see it's been in a nice uptrend since it bottomed back in late March. So I thought this one looked pretty good. The 50 is kind of close to that 200, but I'll give into that one. Macy's M, that was another one I was looking at.
Okay.
And this was going to be my pick, except the PMO turned down intraday, and I got a little bit, I opted for a different one. So, but I like this because you got the breakout above a declining tops trend line. You can see it pulled back to that trend line, but hasn't broken below it. And again, I think when you see rising PMO bottoms from February to March, and then you see comparable price bottoms moving up, it's a nice bullish confirmation. Yeah, you can make you could also say you're looking at a flag it's an awfully long flag on a pole, but
yeah, and a really nice 1-year high in relative strength. Those are bullish patterns. You bet.
MYGN was the other, and then I'll give you my pick. And MYGN, it's been in a nice little trading zone there, and it's kind of coming down to the bottom of that zone. And I've got a PMO that's rising. So I'm like, this is not a bad play, because if you got in near the bottom of that zone, even a ride up to the, just past $31 would be nice. And you could end up getting that breakout and make a move to that 34 range there. And I say that because I think that PMO looks pretty promising, having risen. If you look in the thumbnail, I'm looking at my thumbnail. Yeah. But you can see that, that PMO is rising and has been rising with price. So I think that that's a positive as well. But my actual pick is going to be HIBB, Hibbett Sports. Hopefully that chart still looks good. I really like the setup for this PMO, a nice scoop.
Oh, yeah. I like that too. Yeah.
Yeah, I like those scoops. You've got the crossover buy coming in today. It looks like nice rounded bottom there, breakout above some interesting resistance there at those lows from February, March, and it's pulled back towards that $24 range. So at this point, I think I listed $23.80 as my purchase price for my Monday setup. I would set my stop probably, around $22.50. I mean, if we're going to end up coming down that far below the 20 and the 50, that would worry me. So I was looking at a stop, right around that $22.50. But I think your target could be well above that $26.50 area. I really could see that at least making a play for that overhead resistance. So those were mine, and I know we're coming down to the 10 and 10 here soon. So I know you showed a few, and if you had any more you wanted to add, go right ahead.
Well, the only thing that I would just say is that while today gold stocks are doing really well, so this is a gold chart list that I made up, and I've got over 200 in this gold chart list, and I've got another 400 in another one that carries stocks below 75 or 70 cents or something, tiny numbers. But the point I would make is, these gold stocks are having a nice day today, and in general, the trend in gold has been rising. I wrote about it about a week ago on either Don't Ignore This Chart or in the Canadian Technician. But the point would be that if gold starts to outperform the S&P 500, it's a nice place to go. Now, that can happen in two ways. One way is that the S&P pulls back, and the other way is that gold actually starts rising faster than the S&P is rising. So that's an important one. But let me just go get the chart here. So this chart, Huey SPX, and what we're looking for is a break of this downsloping trend line on a weekly basis. And you could just see we're nibbling above this area. There's some horizontal resistance. But if this starts to break out, you really want to be paying attention, because this was good for when this sort of downward trend broke, and it was this was a 2-year period. This rally on the GDX, so that's the average for the gold stocks, just the ETF that carries gold stocks, went up 150%. So they move very, very quickly, and if you can get that sort of lightning bolt, it's a nice place to look. Anyway, we're setting up very nicely here, obviously watching it closely, and the reason I wrote the article last week was because, you know, we were approaching this trend line. So we're sitting here watching. We don't know if it's going to work out, but if the trade starts to set up, I think you want to be involved with some of the gold stocks, and they're really you know, there's some great stocks starting to move. If I was to just pick Gold Corp, it doesn't really matter. But you know, these are starting to build bases and break out of these bases, and this is a nice ascent, just working its way higher. And I think you know, as this starts to move above the 200-day moving average, the scooter rankings going up above 75. Let's just talk what scooter ranking means. Again, it's a relative strength compared to the other stocks in its peer group. So this is a large cap, so it would be compared to large cap stocks. But its price action is better than 90% of the stocks in the large cap peer group. When that happens, you know, momentum investors or investors that are trying to invest based on relative strength are going to be moving money towards those stocks and selling the stocks that are starting to underperform. So it's that rotation that we're looking for, and as these gold stocks start to outperform the S&P 500, all of a sudden that's when you really get the lift. And again, last time that this happened, as that gold bugs index started to break out compared to the S&P 500, the money came roaring at the industry group. So I would just be aware that there's some good stuff going on underneath the surface, and pay attention. There might be a big opportunity there for gold stocks.
All right. Everybody should get your 10 and 10 requests in here. We didn't actually get too many because I think everybody's been so interested in what we all have to say, which is nice.
Okay. Sure.
So anyway, I'm gonna pull up. I'm gonna go ahead and let's look. First of all, we need to figure out our summary here for our Monday setup. So I had Hibbett Sports, HIBB, and I think we gave me, what price did we give me for that?
2380. Yeah.
Yep, 2380. And then your pick was
Rocket.
And
whoops. I typed that wrong. Let me try that again. RCKT, and whatever we are here, 1937 is fine.
perfect. So that'll give our producer. I'm going to write this down so next week I'll have it right at my fingertips just to see. I'm pretty happy. I ended up on the positive over Tom. That's always the best.
That's the goal. Yeah.
That is the goal. I mean, I do want it to do well for everybody involved, but yeah, it's always kind of satisfying.
Somebody posted that they had their drug rejected by the FDA, so that would kind of create that chart problem. Yeah.
Yeah. So we'll have to give him a break on that one. All right. Well, there's the symbols for Monday setups that we went over, and I am going to attempt again to share the screen. I haven't put in our top the 10 and 10 requests. There we go. Let's go here. So I'm going to put in the ones I have, and this is a great way to add stocks to your chart lists. And I don't know how many people are familiar with this, but as you can see, I'm just putting in all of these requests very quickly, I would say. And let's see, Snap was one, Tesla was one, NWL, JJG, let's see, MRE, there's a few. All right, so we have about 15 right now. So I'll probably just pick right in there. But let's go ahead and we'll look at the RRG very quickly. So excellent. And as you can see, I mean, really, it's always interesting to see what everybody picks. And I'm always interested to see which of the, if we have a group that are in that leading category, and we do. There are a few of them here in the proving category, which we like. But one of the things that Julia says that we should look for are those Northeast travelers, the ones that are going that Northeast direction versus the Southwest. So I'll try and get some of these in that have that travel, but I also like to give different sectors as well. So, and with that, I'm going to pass the screen back to you, Greg, and then I'll give you some of these symbols. And it looks like, I don't know, people—
We're good to go?
Yeah. Yep. So the very first one I think we picked was Zoomies.
Okay, and there's quite a few retail stocks doing quite nicely this year. I will say one thing that concerns me is that retail does tend to top out at this time of year and take a break until July. So if I was to look at this stock, I like it for picking it up in here with this consolidation. Didn't really grab that, right? But I like the consolidation on the stock here as it's trying to break through to new 52-week highs. And I would say any sort of breakout, as long as it holds this 23 level, I'd keep it tight just because retail, the time of year isn't the best for it. But if this stock can keep holding this, I'd definitely want to own it. I'm assuming this surge is on earnings. So if the earnings are good, this looks like it's ready to light it up. That's great.
Excellent. Looks like the most popular request based on votes is Intel INTC.
Okay, and that's the only Dow mover that I think closed March up, if I'm not mistaken. So Dow, this is consolidating heavily here. I think the industry group for semiconductors has been under a bit of pressure recently, and I would continue to own this stock if I held it. I'd say support's down here at the 47 level. Just snap a line on here. And I'm just going to pick 47, whoops, 47, and whatever. Let's just make it red so we can see it. And the point I want to make on this 47 is you're at above previous resistance. So as long as it holds up in here, we could set it up much nicer up here at the 50 level. Obviously, the downward pressure we've got today is impairing it. But the one thing that I would like to see is as long as this relative strength line continues up, that would be great. If it starts to make new 2 or 3 month lows, I'd probably be letting this sector go because it's been wobbling lately. But Intel has a lot of bright people, and they might have been a little late catching on to what NVIDIA's got going on, but they're obviously working to fix it. I think that chart, this breakout from this huge base here, dramatic, 37 to 52, and I don't see a reason for this to pause yet. I think there's lots more left in this economy. So I would try to keep it above 47.
All right. Let's see. The next one I'm going to give you is JJG.
The grains, yeah. So these are notes, and they're a little bit different when you invest in them because they are based on futures. But the grains have been trying to rally, and I think it was corn or soybean on Thursday that took off. But the point would be the grains have been very, very difficult to make any money on. The other chart I like to look at is DBA. And the only reason I bring that up is, similar sort of structure. But if you can get JJG to start moving, I think there's lots of room to go. But look at how tight this chart is, 18.2 to 21. It's a 10% range on the chart. It's hard to make any money, even if it soared to the top of the chart. And this is a little bit better, 26 to 28. You'd need to get up here to 29 or 29.50 for a 10% move. So I like the up turn. I'm just not sure that there's enough momentum and profit to trade it. Yeah.
All right. Let's see. The next one I've got for you is Etsy.
Etsy.
TSY.
Etsy. I mean, that's just up and to the right. It's obviously a very strong stock. I think I'd want to continue to hold it. The stop has got to go in under the last low, 26.50, maybe 26.25 or something like that. I think you want to give it room to work, but this chart continues to push higher, and all things suggest that's going to continue.
Yeah, that was one of my Monday setups way back, and I actually bought it myself. I ended up selling it on that gap up, so I kind of didn't look back. It hit my target. I was pretty happy. It looks like it's an okay thing that I did that. All right, so the next one I have is ONCS, and that is OncoSec Medical. It's actually in the financial space.
Okay, well, that's interesting. I really like the sideways consolidation on this. If any breakout above 220 or 215, I think you want to try and own this. Supports at $160, but this gap here tells you that something better is going on, and I think what you want to know, Nicholas Darvas did some investing a long time ago. One of the things that he looked for was a huge volume spike, and then he continued to watch the stock. And then as the stock kind of went sideways after the huge initial interest, he would buy into it, and he made millions of dollars trading by Telex at the time. But all he did was he looked for a huge volume surge, stock consolidation, and then as the stock started to break out after that, he would buy into that trend, and he did very, very well.
All righty. Let's see, the next one I have is RMD ResMed. It's a healthcare medical equipment industry.
Continues to ride that the 50-day, 10-week moving average higher. At this point, I think it's just consolidating. One concern I would have is that this PPO doesn't look like it wants to go any higher. So you might just have to give it a little bit of a break, maybe trade the full stochastics down a little bit farther. Again, the full stochastics takes the range for the last 14 weeks, and you've got this huge spike in here, so it looks nice and high. But it's sitting at roughly 60% of the last 14 weeks. What you want to know, as the full stochastics comes down, as it starts to turn higher, it's obviously in a beautiful uptrend. If I owned it, I'd hold it, but I'd be looking for the next turn on the full stochastics to try and buy it.
Okay, next one, you're probably familiar with Albemarle ALB.
Yeah, so this is in the lithium space, and rolled over quite hard. All of them have. I think what you're waiting for here is much the same. I would wait for the full stochastics to start to turn up. But on the commodities countdown, if you're interested, steel, aluminum, rare earth metals, which is REMX, and copper. We try to keep track of all of those together as a group, and obviously gold and silver. But when you're looking at the mining stocks, the big area here to be watchful of is that they were all rolling over together long before the steel tariff debate started. So I think you have to wait for this to give you a buy signal on the turn up. Now, here's the nice news. Roughly once a year, you get the opportunity to buy this on a pullback. So I wouldn't complain too much. If this started to turn up higher, I'd be onto it, because lithium is a big opportunity. And here's the ETF for lithium. Same drill. So.
All righty. Let's see the next one. HIIQ, Health Insurance Innovations.
Okay. Wow, that's this really big breakdown last year, and then it's ground up right at this point. I'm worried about the double top. That's what's bothered me. When I first look at it, let's just go on to the daily and see if I feel a little bit better about it. Obviously, everything when you're down 500 on the day, you're not working on the top corner of the chart. But this support level at $28 looks nice and firm to me. As long as that area holds, you might have to give it down to the 200-day moving average, just with the volatility we've currently got. But I would really like that. And somebody asked, how do I zoom in and out like that? On a Mac, you basically just pull your fingers apart on the touchpad. I don't know if that's on a Windows machine, but there's a downsloping line here, horizontal support here. If this breaks to the upside, I'd buy it. If it breaks to the downside, I'd say it's a triangle pattern that basically measures down to the bottom of the range at $20. So,
all right. And I know we cover this, and we covered this, I think, last Tuesday, but people always want to see Square. SQ pulled back nicely here. Really interesting spot. I think all of the payment systems look good here still. I would put a trend line under this rising support area here. I think you have to give it room to work. This is a pretty strong stock. It was at 58. Let's just zoom in. Sorry. Let me just refresh here. Okay. So what we've got here, stock down to 47. That's horizontal support and resistance. As soon as this starts to turn higher, I'd want to buy it. If I looked at on the weekly chart, that would also make me be more interested here. You're right at the 10-week. As long as this support holds in around the 47 layer, I think you want to own it. Any chance the full stock could give you a buy signal would be nice, but one of the issues you do have is a lot lower momentum on the most recent highs. So I'd be a little bit concerned that it's starting to lose its love. But this uptrend is obviously intact, and as long as you can,
pick some levels to shoot against, either the 10-week or this 47 level you want it to hold in there. It's at 47.82 today.
All righty. Let's see, the last one I'm going to give you is CGNX Cognex Corp.
Ooh, rolled over. Again, a lot of these stocks just, every now and then they, especially with these nice big uptrends, they give you 1 year dips on the full stochastic. So I think if you can get the turn back up here, that's where you want to look. The PPO is trying to base, but you might have to wait a few more weeks before you get it. But it's definitely at a major support and resistance layer. Let's just zoom in on the daily to see that. So you're sitting here at 47 as a ceiling. Just draw a horizontal line across 47.50. And what we want to see on this horizontal line is you'd like it to hold in this area. There's a gap here. Maybe it comes back to fill that gap. If you own it, one of the problems about owning it right now is it's back under the 200-day moving average. So I would wait for the full stochastics to turn it up if I already owned it, and or sorry, if I didn't own it. And if I did own it, I wouldn't let it get any lower than this 47.50.
All righty. And that is 10. We did pretty good, 10 and 10.
Perfect.
Yes, almost in 10 minutes. That's not too bad. I understand from my producer I have a little extra time on the end of the show today, so that works out nicely. All right, so let's go ahead. I'm going to show you. You should be able to see those, the symbols we covered. And I will get those up into the Market Watchers live chart list, or Greg will work that out. And so you'll be able to get to those. Just go to the Market Watchers live blog, and you will be able to, at that point, get to the chart list. It'll be the link at the top, and then you can see all of these 10 and 10 stocks that we have been doing. So before I get into our market update, I do want to talk about, real quick, we've got a little gathering coming up in August, don't we? Greg, there he is. So yes, ChartCon, are you pretty excited about this?
There is so much. I think the one thing that I like about ChartCon is just the variety of authors and writers that are showing up. We have an unbelievable list of people that are going to present, not just the regular stock charts people, but we've also got some unique new people. Dave Keller will be speaking, getting Dr. Alexander Elder, Tushar in there, really interesting people. And of course, Martin Pring and John Murphy, so much technical analysis knowledge. And the nice part is it comes as a bubble. So all of us are looking at something together at the same point in time using the same date stamp. So you really get a feel for how the technicians are viewing the current market and different ways to invest with the market. I think it'll be outstanding.
Oh, I know. I really can't wait. And so if you want to do this, it is an online conference. And if you go to the StockCharts.com/ChartCon, you'll get to the page we're showing you here. We have early bird pricing currently. And if you want to come in person, I think we still may have a few seats left, but I'll have to double check that. But yes, you can register for early bird pricing, currently at $199. So.
And Aaron, how do they get to that page?
We do StockCharts.com/ChartCon right there.
There you go.
And there you are. There you go. All right. So go ahead and check that out. It is online, so you don't have to travel to Seattle. You get to sit there front row seat watching us live stream, and it'll be a lot of fun. So definitely check it out. And let's see. So before I get into the DP monthly chart review, I'm going to do a quick market update. And someone asked about putting the TSX in, and the fact that when you come back, you usually it's gone if you use the link from the member homepage. I would recommend putting it in here. Just type it in, the symbols that you want, and then I would just go ahead and bookmark it. And that way you'll always get the ones that you like, and they will always come up the way you like. So the other way to do it is have a chart list and then select candle glance is how you view it. So couple of ways to do it. But let's go ahead and get into this market update. And, you know, really not much improvement in the market right now. We're still seeing stock prices at intraday lows. It looks like we did actually bounce a little bit at lunchtime, but we're starting to come back down, and we could end up setting more lows on the day. Russell 2000 has made a bounce, but it looks like it's going to follow suit, coming back down after forming what could be a little flag. We'll have to see if that pulls the right way in the intraday charts. But you can see TSX, it's also made a bit of a move back. We're not seeing quite the pullback this afternoon as we're seeing on the Dow and the S&P 500, for example. Treasury yields are up slightly. We can see a reading right now, 27.44. UUP, we had a gap down. It's been rather erratic trading for UUP. Currently, it's unchanged, but we have spent most of the day in the negative for UUP. Commodities are down, likely because we're seeing a problem in oil right now with USO, last reading of 1277, and gold definitely making the move. This is the area to be. Not a surprise when you see a rising VIX. You start seeing fear in the market. A lot of times you'll see a bit of a surge in gold. You can see TLT bonds, 20-year Treasury bond ETF, and we are up as far as bonds are concerned. Currently, TLT reading at 121.86. And I'm going to take you quickly to our member dashboard, market summary. Let's see what's going on intraday for the industries and sectors. And as you can see, lots and lots of red. We're not seeing green just about anywhere. As far as our sector spiders, XLU is the leader, and it is still down almost 0.5% right now. Consumer discretionary getting hit the hardest, down 2.9%. As far as industry indexes, the only one on the positive, not a surprise based on the chart. We're seeing gold rising. The XAU is up almost 1.75%. Every other industry index is down, with utilities lagging the least at this point. And the worst, we can see natural gas and biotechs really getting hit hard today. International ETFs, we're seeing all of them down. The best one is the UK ETF, and it is still down over 1%. The laggard here down 2.5% is the Mexico ETF, and the China ETF down 2.25% currently. And with that, that's the market update. I will pass it very quickly to you, Greg. Did you see anything you wanted to comment on?
Yeah, so the big thing that I'm looking at, we're seeing a move into TLT, and we're seeing the US dollar rise. Let me get that. And we're seeing the US dollar rise. So this might be a move into safety from European investors. And the reason I say that is last week, the US dollar, and I'm just, well, UUP will do it too. The point I want to make is last week, we were holding in this sideways trading range. This will be the 12th week. And it doesn't look like much, but literally last week, we went from breaking to new 6-week lows, and we surged in 2 days right back to the top of the range. So this area is really important. And if all of a sudden money was going to move into the US dollar, I would think it's moving into the stock market, not the bond market. But the TLT is telling us different. And the big picture here is as the TLT comes up, and I know there's lots of people that are fully expecting a reversal right here, right now, and they were expecting that at 120, now we're at 122. The big point I would say is if some of these charts start to break down in Europe and money starts to move to the US, it probably won't move into the US banking sector. It's going to move into something more rigid like the bonds or whatever. On the long-term chart, and again, just a little bit of a plug for the commodity countdown. I talk about the bonds every now and then, but the big issue we have on that chart, and let me just, if I could take 1 minute and go grab that chart, I think it's pretty important. Just see if I can find it quickly in my bonds here. 10-year, the 30-year. The point I want to make on the 30-year is that it is right up against this 30-year trend line. And if there was ever a place to expect the bonds to reverse, this would be it. And, you know, these blue lines are at places where they were meaningful reversals. But the main point is, look at the MACD right here, just bottoming. It looks like it wants to turn up higher. And from these low blue levels, you know, those are major, major, major reversal levels. So I would not be surprised to see bond prices move higher and bond yields move lower, even though everybody's predicted the end of the bonds. And so I might be wrong, but I'm just saying, if there was ever a place for us to expect support, it's here, and it appears to be showing up now. So
excellent. All right, let's go ahead. I'm going to move on to the DP monthly chart review. And basically what I want to do, and again, Carl did a lot of this for us in the DP weekly wrap. Okay. So I recommend that you go check that out. I'm still having some screen share issues here.
Okay.
Yeah, I know we figured out a way to fix it. I'm just going to hopefully.
Zach, maybe you could take it from Aaron and then give it back.
Yeah, there we go. So now it should work. Let's try it. All right. You got to stop sharing in the background there. I can't. There we go. Okay, let's see.
Super.
This me? Oh, this
Yep.
is excellent. Okay. I first want to go and take you to the decision point scoreboard so you get an idea of, you know, what we're looking at in general as far as the markets go. And as you can see, really the strength lies within the NASDAQ 100. And that's only because we haven't seen a negative 20, 50-day EMA crossover. And that's because, of course, we had that almost, you know, parabolic move on the NASDAQ 100 more so than on the other indexes. And so it's taken longer for the 20-day to come down to that 50. And I will show you that chart. The long term right now, and these are these monthly PMO signals, you're going to see on many of these charts that they are turning down. Again, I'll get into that. But I just wanted you to note that the short and intermediate term right now are still really, as far as decision point signals are concerned, certainly shaky, bearish, neutral to bearish. And I think that's why we've certainly had a more bearish bias as far as our analysis with the decision point information. And so, you know, when I see these kinds of signals, it's a concern. So let's go ahead and look at some of these charts. If you are interested in seeing all of these charts, these are in the Decision Point Live chart list, and you can look at all of these daily, weekly, monthlies. I have the main indicators that I use, ultra short, short and intermediate term. All of these are available to you in the Decision Point Live chart list. And you can get to that simply by going to the blog articles. You pick my blog. And here you go, Aaron's live chart list. And here you are. You're going to see the ones, and they will be annotated. So let's go ahead and we're going to get started. I want to look at the Dow. I'm just going to collect myself here. I think what will be the concern, Greg, that what's really worrying me are these 200-day EMAs. And right now they've managed to hold up as support, but it's a bit worrisome to see them being tested right now. And that's the daily chart for the Dow. Now, when we bring it out to the weekly chart, you can see that rising bottoms trend line has now been broken, but we are looking at a 43-week EMA holding up. And before I continue, everybody says, why do you use a 17-week and a 43-week EMA? Because I like it. Carl and I have, you know, you experiment with the different EMAs. We like to use this. It gives us a similar look as on the daily chart with a 20 and a 50-day EMA. So that's just its personal choice, not necessarily right or wrong. But yes, we're getting that breakdown. The 43-week EMA is currently holding up, but this is very concerning. And that area at 23.5 for the Dow is very important. And you can see we got that PMO sell signal back, well, goodness, back in February. And the PMO on the weekly chart, not interested. in decelerating or turning up. So when I look at the monthly chart, this is where I want to see what's going on with that PMO. And of course, the PMO on the monthly chart moves very, very slowly. But what is concerning is, we've been on an uptrend for the PMO for quite some time, and this is the first time we're finally starting to see it top out. I think the positive is this top is coming slightly higher than that previous one in 2014. So that gives me a little bit of hope. But what I would be watching is a drop, and if we can't hold that 200-day EMA or that 43-week EMA on the weekly chart, I would turn to this monthly chart and say that, there's certainly plenty of room to continue lower. And the good news is you would still be upholding, I guess you could say, that rising bottoms trend line will still be working for you. So let's look at the NASDAQ. And our producer says I can finish the show 5 minutes later on our clock. So I'm feeling a little less stressed about getting all of these charts in. So as you can see, we're getting these breakdowns. NASDAQ 100, we're now, today, it looks like we're going to get that 20-50-day EMA negative crossover. That is going to set that scoreboard to a neutral top middle on the NASDAQ 100 scoreboard. That's going to change today. I don't see it moving, avoiding that signal. The only way it would avoid it is if price closed above that 50-day EMA. Well, that's clearly not going to happen. We're finally seeing PMO readings in the negative territory. So all of these things are what all of these are concerning to our decision point analysis. And one of the reasons I know Carl has been leaning toward the idea that this is a bear market, that we're getting ready to face that. And I can see that with some of these indicators. I don't subscribe to that just yet because there is support levels out there still. And as you can see for the NASDAQ 100, we've got some support going on out there. Quick look at the weekly chart. Again, these breakdowns are concerning, but as long as I can hold some of these EMAs, I'm not going to get quite as concerned about it. You can see last week we got that negative crossover, the PMO sell signal on the weekly, but what I promised you today are monthly charts, so let's look at those. A lot of rising wedges, and these are very long term. We're talking about over the span of years, but they are there. And, I'm not as concerned about the breakdown from these wedges. I mean, if we're going to go into a bear market situation, surely we'll see that. But at this point, we could still get that corrective move to go even deeper and still hold on again to these rising bottoms trend channels on the monthly charts. But this, in that thumbnail, this is concerning. These PMOs on the monthly chart have turned over. They were already decelerating and now they have turned down, and we just don't see that very often. So I would be a little bit concerned here. Now you can tell that when we had the previous PMO sell signal on the monthly chart, it really only resulted in a lot of this sideways mostly. We got some corrective moves in there, but we didn't have a full-on breakdown into, a bear market. So these crossovers are very important. They don't happen that often. We should pay attention to them. But, with the strength of the market lately and this nice, strong rally we're seeing, even if we get that sell signal, I wouldn't get worried until we drop below rising bottom support. Looking at the OEX monthly chart, again, similar situation, rising wedges, not quite so far to go down to test the rising bottoms line that I have selected here. And so I think that's good news. We're looking at about 1100 as support. So we've dropped below those EMAs, which like I said, that is concerning, but we are getting here close to that rising bottom support. This is what we need to watch very closely, though, are these topping PMOs on the monthly charts. And hopefully we won't see a breakdown. We won't see a negative crossover on those. S&P 500, I like the OEX. I like the fact that, rising bottom support is still there if you draw it from that 2009 low. We do have the PMO topping. Again, things to worry about, but we still have support levels here that we can hold. And, we will watch to see if this sell signal actually comes to fruition. In the case of the S&P 500, you've got a PMO top below that previous top. So again, weakness, it's spelling weakness. I'm not seeing bear market issues just yet. Let's look at the S&P 400 very quickly here. And as you can see, we've got that PMO getting ready to have a negative crossover on the mid caps. We're already testing, though, that rising bottoms trend line support. And it's also sitting on that 10-month EMA. And so this is going to be very important to hold at this point for the mid caps. And honestly, if I start seeing the mid caps, and as you're going to see the small caps starting to fail more, and you can see right here, I think I'm going to go ahead and annotate this because I think you can also adjust here a little bit. Let's go just a little bit shorter term here on that monthly. And as you can see, we're still holding that area of support, but these are rising wedges. This is a rising wedge on this S&P 600 ETF, topping PMO. We don't have the sell signal yet, but we want to, I don't want to see the small caps starting to fail too quickly here. I think we need them to hold up the market to get us out of this corrective mode. But now we're looking at IWM, and again, rising wedge. We haven't had a breakdown below rising bottom support or that 10-month EMA, but we're still looking at topping PMOs. So I would have to tell you, long term, I'm really not happy with the momentum shift. Not what we want to see at all. We're seeing that negativity, but I have to say, when we start looking at weekly charts, it's even more concerning, because we have these very steep falling PMOs, and that's the weekly for the IWM. Look at IJR's weekly. Again, you can see the sell signal, and it's accelerating downward at this point. Top below previous top, setting up for this sort of correction mode that we ended up in. At this point, I'm just going to be watching those 43-week EMAs, and hopefully we're going to hold those. I wanted to look at the big four, as I call them: dollar, gold, oil, and bonds. Sort of in your arena there, Greg. I'm not sure if our analysis will match up, but it'll be interesting. You can certainly comment as I finish up here. We can see this, I said, nearing a PMO buy signal. Obviously, we have gotten it now, and this is on the weekly chart. This is driving me crazy. I don't know about you, Greg, but this overhead resistance area, right around that 2365 area, that previous close back there after we had that big move down. What the heck? It needs to break we need to see that breakout, and it just isn't happening for the dollar. And it's, I've been bullish on the dollar for quite some time. And it's been bothering me, obviously, that we haven't gotten that breakout, excuse me, above those overhead resistance areas.
That 12-week, it's been 12 weeks. I mean, on the commodity countdown, it's been wearing me out. So.
Oh, exactly. And it's really been set up. I mean, if you look at a daily chart, I mean, it's just been, the PMO has been going the right way. You had a double bottom pattern. We got a whipsaw buy here, but actually
on Monday. Yeah, I know that was a really big whipsaw.
Yeah. Yeah. And so
5-week lows and then right back to the top of the range. Yeah.
Yeah. And I mean, that's honestly, I like to see that, because you get that quick pullback, and that usually gives you a nice spring. It's just not happening here. And now with things kind of moving in the ugly direction for gold, kind of concerns me. But I mean, even the monthly chart, a declining wedge, we're holding that support level, and this is the US dollar monthly chart. The PMO is not looking great. There's no deceleration, as I'm saying, but there's not really any acceleration either. I don't like it, but I think the chart pattern and the support level holding is positive for the dollar. So I still am holding out hope. But with gold, really, I think set up, and as you have noted, in a great position. We've gotten that pullback on gold, and it's with the market having some struggles here, I do know we usually see a nice pop for gold, and it's certainly needed. We topped last week and it fell all the way back down to this 50-day EMA. We're still holding on to our positive signals here, but the PMO has topped. So I'll be watching that closely. But at this point, I would have to say I've remained bearish on gold all through this whole consolidation phase. I mean, really, once it busted out, and then over here when we started to top and the PMO topped below the previous top, it just, everything was looking pretty ugly. We did get that pullback, but it's been able to hold that support level, and even through a double top, not being able to execute that. You know, as stubborn as the dollar is for breaking out, gold has been stubborn about breaking down. And now I think it is looking pretty good. And given what we're seeing in the market in general. And, you know, when I was looking at the, excuse me, the monthly chart for gold, you know, I'm seeing a wedge here. So not too bad, looking pretty good there. We're about ready to finish up and wrap up the show here. I'm going to show you the monthly chart for oil, and then I will show you for bonds. But we're still set up nicely for, this is WTIC. And, you know, we got the buy signal. It's heading up. We don't have to worry about overhead resistance for a little bit longer. It's holding on to that 6-month EMA. And finally, looking at bonds. And as you can see, you know, we got that breakdown. This was a head and shoulders I've been watching. I think we could still see that execution. It would bring bonds way down to that 125 level. PMO is suggesting bad news for bonds. But, you know, when I look at the daily chart, it doesn't look quite so ugly. Breaking out of a rising trend channel. So, you know, in the short term, I think bonds are pretty good, but long term, not so much. So with that, I know we need to wrap up this show. And Greg, it has been absolutely great to have you here. There's my monthly chart review. I will have this up in the Market Watchers Live recap, so you'll be able to see my thoughts on the monthly charts that I just presented. But oh, yes, and my stock market outlook as well. So that's what we're looking at as far as the monthly chart review is concerned. And with that, Greg, again, great to have you. And we get to have you the rest of this week. I'm very excited to have you as my co-host. Nice change of pace from Tom. I think you did fantastic.
Thank you. I think the big chart to keep watching on, I mean, the market's making new lows as we're talking here, but keep watching that Deutsche Bank chart and the European bank charts. Those are the ones that are starting to cause friction in the market, I think. But anyway, stay tuned. But yes, gold looks like it wants to work its way higher here.
Excellent. Yeah, I have to agree with you there. So let's see, what's the rest of the week got in store for us? We did start our StockCharts TV today, and so you can continue watching. We will have the schedule up there. Take a look at it. I hope you enjoy it. Mary Ellen McConigal will be here on Wednesday, Bruce Frazier Thursday with Wyckoff, and then Greg, you're going to be doing a workshop for us on Friday. And with that, I do want to thank all of you for being with us today. Please remember to complete that survey as you exit. The link is underneath the player. We love to get your feedback and hear what you think of our show. As a quick reminder, Market Watchers Live airs 5 days a week, Monday through Friday, from noon to 1:30 p.m. Have a great afternoon, everyone, and we'll see you back here tomorrow. Happy trading.